Headlines are scary right now. Over 108,000 layoffs were announced in January, and that's the highest for that month since January of 2009. Plus, the U.S. and Israel are now in active military operations against Iran, and markets are reacting. But what does all this really mean for the U.S. housing market, jobs, interest rates, and most importantly, right here in Gainesville? Let's break it down in terms you can use. First, with the conflict in Iran, oil prices have already jumped, with Brent crude climbing in the 70s, and analysts warn prices can go much higher if shipping through the Straits of Hormuz is disrupted. And that's a key choke point. Nearly a fifth of the world's oil flows through there. So a big spike in energy costs pushes inflation higher, especially on gas and transportation. And higher oil prices and inflation can make the Fed hesitate to cut interest rates or even tighten them, which keeps mortgage rates elevated. And that matters directly to anyone thinking about buying or refinancing their home. Now let's talk about jobs. As far as the January layoffs, it's a big number and reflects corporate retrenchment across transportation, tech, healthcare, and other big sectors. Companies continue to announce cuts into February, especially in tech and corporate roles, even as weekly jobless claims remain relatively steady. So what that means is not a crashing labor market, but more of a slowing one, less hiring, more caution. And when consumer confidence softens, so does demand for big purchases like homes. So here's the real interplay. Geopolitical risk and market volatility may push investors towards safe assets like U.S. Treasuries, which can temporarily lower some interest rates. But higher energy prices and inflation risks make rate cuts less likely in the short term. So for home buyers and sellers, that means mortgage rates could stay stubbornly elevated, even if the broader economy is slowing. And slower economic activity, reflected in layoffs and soft hiring, tends to dampen housing demand, especially where buyers are sensitive to job security. Now, here in Gainesville, North Central Florida, our economy is different than national headlines. We don't rely on big tech or global corporate campuses. Our jobs are anchored in healthcare, the University of Florida, and education, local government and services, public service professions. Those sectors tend to be more stable even when corporate layoffs elsewhere make national news. So, what does this mean locally? We may see a slower migration demand from certain sectors. Some buyers could become more cautious about timing, but local demand remains solid due to steady employment in education, health, and public service, not just headline-driven layoffs. So here's the bottom line. National layoffs and geopolitical risks don't automatically crash housing, but they can slow activity and influence rates. Gainesville's local fundamentals matter more than for your real estate decisions. So if you're considering buying or selling, let's walk through your timing and financing strategy, because in times like this, having a plan beats reacting to headlines. I'm Matt Sierrafice with Real Broker in Gainesville. You can reach me at msierrafice@gmail.com or 352-870-5700.